That very long break. It's great to have you back. So next up, we have a presentation from the Director of Policy at the Business Council of British Columbia, Jairo Yunis. Jairo leads work on a variety of economic and regulatory issues, including fiscal and tax policy, labor markets, trade, and competitiveness. He began his career in local governments in Colombia, focusing on economic development, labor markets, and regional competitiveness. And he later joined the Fraser Institute as a policy analyst, where he specialized in energy policy, carbon pricing, and electricity markets. He went on to serve as an economist and then director for British Columbia and Western economic policy at the Canadian Federation of Independent Business, CFIB. Jairo holds a master's degree in public policy from the University of Calgary and a bachelor's degree in political science and international relations from the Pontifical Xaverian University in Columbia. Please welcome Jairo up for his presentation on BC's economic and fiscal situation.
Good morning, everyone. It's a pleasure to be here with all of you, so many familiar faces today. I just want to say thank you to Stuart and to the team at Resource Works for organizing such an amazing event with so many great speakers and panelists throughout the day. I encourage you to please stay and enjoy the agenda. Now, I just want to preface my presentation by saying that the data and the numbers that I'm about to show you are neither encouraging nor positive. However, now that being said, I am quite optimistic in the long run, given BC's strengths and advantages. We have an abundance of natural resources. We're blessed with that wealth. We are Canada's gateway to Asia-Pacific markets as well. And we have a highly educated workforce. So we do have the strengths to make sure that BC is a very attractive place for people to build their lives, to follow their dreams, and to build their businesses. We've somehow managed to dig ourselves into a deep hole, but we can also dig out ourselves out of it. And as the saying goes, the night is often darkest just before the dawn. So with that, I start a little bit of my presentation. So this is kind of the game plan. First, I'll talk a little bit about economic growth and how has GDP trends looked like over the past few years. Then I'll touch a little bit on some of the labor market indicators where jobs have been created, where jobs haven't been created. Then I'll touch a little bit on the province's fiscal position. I'm sure all of you are excited to hear about that one, using last week's numbers from the updated quarterly report. Then I'll touch a little bit on interprovincial migration and the consequences of the economic uncertainty and some of the negative signals we've been sending to young workers and businesses. And finally, I'll touch a little bit on BC's provincial policy recommendations. So with that, I'll start with economic growth. So this is a chart done by my wonderful colleague, David Williams, BC's VP of Policy. In there, you can see real GDP per capita growth across the provinces. Now, the green triangle shows the long-run average. That's 30 years' worth of real GDP per capita growth between 1997 and 2024. The orange diamond shows the last 5-year average, so 2019 to 2024. The light blue bar shows 2023, and the dark blue bar shows 2024. So as you can see from the graph in BC, we're used to growing at around 1.3% every year in terms of real per capita, GDP per capita growth. Now that rate has significantly slowed down over the past 5 years, as you can see from the orange diamond in BC, to 0.2%. That's technically positive. However, that's only, and most of it is largely driven by the huge lift that the once-in-a-generation mega capital projects gave us. That's Site C, that's Trans Mountain, that's Coastal GasLink, that's LNG Canada Phase 1. Without that huge investment push, our economic performance would have been much weaker. And it was still better than most provinces, I would add. However, in 2023, our economy, again in per capita terms, contracted by 0.8%. And in 2024, we had the second largest economic contraction after Ontario. So this graph and this data speaks to a picture of an economy that's losing momentum, an economy that's underperforming relative to its historical average. Now, this graph shows which industries grew and which industries contracted in 2024. That shows real GDP. And if you see the dashed red line, there, yes, that shows population growth. It was about 3% last year. So that's kind of the clear benchmark that industries have to clear just to keep pace with population growth. And as you can see from the graph, only 6 industries grew faster than population growth, and half of those were in the public sector, while most private sector industries either grew slower than population growth or outright contracted. For example, in the goods industry, we saw construction and manufacturing not having a good 2024. So this picture here that I'm trying to paint and the message that I want to convey is that imbalance between the private sector economy and the public sector is a key part of the story behind BC's underwhelming economic performance. If we take a longer view between 2019 and 2024, the story is very similar. Public sector industries growing faster than population growth, while most private sector industries either growing slower or contracting. Now, there are a few bright spots, especially in a narrow band of services that have grown between 2019 and 2024. Now, the labor market tells a similar story. So this graph shows growth in BC's employment between January 2019 and June 2025, broken down by industry. And as you can see, the story is very similar. 4 of the 5 fastest growing industries, again, in terms of employment growth, have been in the public sector, with rates of about 39 to 40 to 44%, while most private sector industries are nowhere near those rates. And with many of them also experiencing job losses over the past 6 years. So taking a step back also, and this is kind of another way of showing the data, the left-hand panel looks at the number of private sector employees compared to its pre-pandemic trajectory, and the right panel looks at public sector employees compared to its pre-pandemic trajectory. So over the past 5-6 years before COVID, we are roughly 280,000 jobs below trend in the private sector, in stark contrast with the public sector, in which we are around 100,000 jobs above trend. So, and just to be clear, the problem is not hiring public sector workers. We all need a robust public sector that delivers efficiently services that British Columbians rely on. However, the problem comes when it's at the expense of the private sector, or when there's an imbalance between both, because the private sector provides the tax base to fund the activities that government works and to hire workers in the public sector as well. Now, this graph shows labor demand, which we measure at the number of job vacancies for every person looking for a job. And between 2015 and 2019, that averaged around 6 jobs vacant for every 10 people looking for a job. Now, during the tight labor markets that I'm sure all of you remember in 2022, that number spiked to over 12 jobs vacant for every 10 people looking for a job. So there were more jobs vacant than people actually looking for a job. Now, that labor demand has significantly cooled down over the past few years, and we're now sitting at roughly 4 jobs vacant for every 10 people looking for work. So that just suggests an economy, again, that is losing momentum. Businesses are more cautious to hire people. Hiring is a bit slow. Confidence is a bit slow. It's a bit low. Now the fun part. So this graph shows BC's budget balance since, I believe, 2010. And as you can see, in BC, we've tended to run either surpluses or very small deficits, regardless of political parties. But since 2022, 2023, that model, that balance has cracked. Since that year, our revenues are projected to grow by about just 2%, and our operating expenses are projected to grow by about 20%. So this really highlights, at one point, our credit, we had a AAA credit rating. Our credit worthiness was on par with Switzerland. Now that has broken. We're projected this year to have a record $11.6 billion deficit. And that's, it could have been higher if it wasn't because of the province booking a one-time accounting gain of the Canada-wide tobacco settlement. That deficit would have probably been around $14.1 billion. That's almost 3% of our economy. Now our credit worthiness is around the likes of Newfoundland and PEI, not provinces known for their fiscal responsibility. And if we continue down this path, we will probably see a fifth credit downgrade in as many years. Now, think about this graph as a per person lens on BC's balance sheet. So the blue bars show BC's debt per person, taxpayer-supported debt per person, and the orange line shows debt servicing costs per capita. So in BC, each British Columbian was on the hook for under $10,000 probably. And then that changed, and now we're almost above $17,000. And at the end of the forecast horizon, we're projected, each British Columbian is projected to be on the hook for almost $30,000. So almost more than triple the amount that we used to owe. And that matters because we also are paying more in debt servicing costs. We tend to be paying around $500 per British Columbian to service our debt. And that, again, that's money that's not going to healthcare, to education, to fund infrastructure upgrades, but rather going to bondholders. And we've usually spent $500 per British Columbian. Now, at the end of the forecast horizon, we're expected to be paying around $1,300 per British Columbian just to service our debt. Now that translates to roughly $7 billion. If it was a ministry, it would be the fourth highest ministry. And it's important because, as perhaps some people might disagree with me, but deficits do matter. And deficits matter because we're paying more in servicing our debt, and because it sends a negative signal to households and businesses that taxes need to be higher in the future. And that has a huge impact on business confidence to deploy capital, on consumer confidence to spend. And if, again, like I mentioned before, if we don't get our fiscal situation back on track, we would probably have a fifth credit downgrade in as many years. So what are the consequences of this economic uncertainty, of the negative signals that we're seeing, of a weak private sector economy? People are leaving the province. Young workers are leaving the province. This graph shows net interprovincial migration, and BC tends to have positive net interprovincial migration. More people from other provinces want to come to BC than people from BC wanting to go to other provinces. Now that has shifted dramatically over the past few years, and now we're losing young workers to other provinces, in particular Alberta and Ontario. In record numbers. And I like to say that these two graphs and just more generally interprovincial migration is a real life referendum on how attractive a place is to invest, to build your life, to follow your dreams. And what we're seeing right now is that people are voting with their feet and are unfortunately leaving the province. These are young workers under the age of 40 going to Alberta, who are young entrepreneurs, young workers, who also provide the tax base that we need to fund essential services. So I started by saying that the data that I was about to show you was neither encouraging nor positive, but there are some bright spots. Like I mentioned before, we have huge strengths in BC. And earlier in January, BC sent to the province an economic blueprint, a list of 10 ideas that the province can adopt in order to kickstart the private economy again. Now, these are not silver bullets, but they will definitely make us a more attractive place for businesses to deploy capital and to invest with confidence. We group them along three main categories. The first one, of course, not be surprised, restoring fiscal finances and addressing some of our issues with tax competitiveness. For example, we have the fourth highest top personal income tax rate in North America. We have the highest marginal effective tax rate on new investment across the provinces because of how our provincial sales tax deals with capital investment and intermediate inputs. So addressing those tax competitiveness issues and addressing our fiscal position are key to the strategy to become a more attractive place for investment. Now, the second category is growing our economy while reducing global emissions. That means shifting our mindset from focusing on local emissions and focusing more on growing the economy and developing our natural resources and exporting them to Asia-Pacific markets where they're high in demand. And finally, we have another category about having an open for business mentality, and that means having an open for business sign, and not only within government but also from political leadership needs to send a signal that BC is open for business, and that we are a province that is really committed to businesses and to investment. So with that, I'm hoping that you guys are not too depressed after that. But I also want to have a plug in here. If you haven't bought your tickets for our annual BC Business Summit, they are running out fast. We're about 350 people in the room now. So if you haven't, please go to our website and get your tickets. And I believe there's room for questions. No room for questions. Okay. Thank you so much. Thank you.